Today, we're going to be looking at how global liquidity will fuel the next bull run. And to be honest, it's actually kind of already started, especially if we look at something like the US M1 money supply. So the US M1 money supply is looking at the US economy and the amount of notes and coins and other money equivalents currently in circulation. And we can see, especially after the COVID 2020 pandemic, this had a massive sharp rise to the upside. But we can see now that this is actually beginning to tail off. And a lot of the things we're going to be focusing on is how this shift in liquidity, this shift in supply of fiat money actually really strongly correlates to the Bitcoin price. As we've seen, as this begun to top out, we've seen a bit of a bear cycle in Bitcoin. Obviously, over the past year, this has changed a little bit as this metric has flattened out. So I think maybe a better metric to look at than the M1 money supply is the M2 money supply, because this isn't just necessarily money in circulation. This is also taking into account cash equivalents such as checking deposits, saving deposits, etc. And this isn't quite as drastically altered due to the stimulus that was caused by COVID 2020. So we can see here that this is even more notably leveled off. But again, we can see a very strong, obvious correlation between Bitcoin's price increasing, the M2 money supply rapidly increasing, and this decreasing, and obviously Bitcoin's price decreasing a little bit as well. But rather than just looking at these charts, because historically, I know there are some cyclical ups and downs in this supply, but really this does tend to just trend to the upside over time. Over the past few decades, if you look at a longer time frame chart, this basically just always goes up. What we need to do is look at something where we can actually see the rate of change. So on looking to Bitcoin under the macro suite section, we actually have the year-on-year changes in these charts. So if we just go back to the M1 money supply, we can see the year-on-year change here. And obviously we see this huge spike to the upside, as we said, due to the COVID 2020 stimulus that we saw in the US economy. But what we can see is, again, maybe a bit clearer in the M2 money supply, again, how strongly this correlates to the Bitcoin price action. We can see when this really began to kind of bottom out, as we said, this is almost always increasing. So the lowest rate of increase we had on a year-on-year basis was here, November 30th, 2018 in the previous cycle. And if we just go to something like the global M2 chart here, we can see that November 30th in 2018 was pretty much the exact bottom of the Bitcoin bear cycle. If we go back to this chart, we can see that this peaked February 28th, 2021. Where did Bitcoin's price top in at least the first all-time high we set above $60,000? Well, that was just in early March 2021. So there is a very strong correlation between these two metrics and the Bitcoin price action. And most recently, we can see, and why we're actually getting a little bit more bullish about the incoming liquidity into markets, is this bottomed out in a negative rate of change in April 2023. And if we just zoom in here, we can see April 2023. Since then, Bitcoin has rather exponentially increased to the upside from around the high $20,000 region to where we are today, around $40,000, which is very nice. But we need to take into account that Bitcoin isn't just US focused. Bitcoin is a global asset. So I'm already on the chart, thankfully, but we can see here that this global M2 money supply isn't just taking into account cash and cash equivalents in the US economy, but across all major economies. And we can see that this is probably even more notable, the impact that this actually has. If we just zoom in again over the past few cycles here, we can see as this bottomed out November, December 2018, that really marked the bottom of the previous bull cycle. And again, as this topped out and began to flatten a little bit, we could see that this was where the all-time high occurred before this decreased, coinciding with the Bitcoin bear cycle. And again, this bottomed out pretty much exactly as Bitcoin bottomed in November to early December 2022. And since then, it's actually been on a very steady increase, which is why probably we've seen Bitcoin up over 160% in 2023. And again, we actually have the M2 year-on-year rate of change alongside Bitcoin to see this relation even clearer. And we can see here that, again, once this bottomed out, it was pretty much exactly as Bitcoin's year-on-year rate of change bottomed out. And same for the all-time highs. And this has been true for pretty much of all of Bitcoin's price history. So now we're actually seeing this rate of change in the global liquidity begin to steadily increase. I know there's been a little bit of a retracement here, but realistically, there's just too many factors in play that will suggest that this is going to continue trending to the downside. Global liquidity is definitely on the rise. If we look at US liquidity, we can see that this is definitely beginning to trend to the upside too. And we can see this risk on sentiment is actually being mirrored in more traditional markets. If we just look at treasuries, for example, we can see treasury yields versus BTC. Now, treasury yields increase typically when there's a rush to safe haven assets like government bonds, for example. So once we see these rates rapidly increase, it has typically coincided with Bitcoin's price declining. And once we see these start to rapidly decrease, it typically has coincided with Bitcoin's price rapidly increasing. And once this is decreasing, it suggests that investor sentiment is looking for more risk on assets. They're potentially trying to pivot their capital into plays that are potentially going to bring the most exponential rewards. And we can see, again, just recently, this has begun to very much shift to the downside. So not only is global liquidity beginning to increase, we're now seeing treasury yields across most government bonds begin to start rapidly decrease. And both of these are just catalysts for new capital inflowing into the Bitcoin and cryptocurrency space. And ultimately, this is what's going to fuel the next bull cycle. As much as we can see other metrics, as much as we can see on-chain data, really they all come into play. And if we look at something like the Bitcoin trajectory catalysts, which factors into account all of the influencing factors of Bitcoin's price appreciation or depreciation, we can see really that as a foundational influence of Bitcoin's massive price appreciation over the coming months and years, these macroeconomic factors are really going to be, like we said, the foundational baseline point that really pushes Bitcoin's price considerably higher, alongside other more speculative and risk-on assets. And this isn't to say that we're going to see non-stop exponential gains to the upside. Obviously, there's going to be some pullbacks. There's going to be a bit of a bumpy road, like we could see from the previous cycles here. Bitcoin has its peaks and troughs. Global liquidity has its peaks and troughs. But ultimately, like we said, we're currently at the early stages of the next business cycle, the next liquidity cycle, where we're seeing more and more government printing, more and more cash to try and stimulate economies. And really, this is very bullish for the Bitcoin price. Also, if you haven't already, please don't forget to like this video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on lookintobitcoin.com, your #1 source for Bitcoin information. So just to summarize, US and global liquidity is on the rise, and all signs are pointing towards money printers continuing to go brrr during the coming months and years. Typically, increasing liquidity has led to significantly higher Bitcoin prices, as the increasing available supply of fiat money leads investors to invest to prevent wealth deterioration. Realistically, where else is better to put your money if the money is continuing to be printed, if you're seeing your cash devalue and your purchasing power dwindle? Ultimately, you're just looking for the next best thing to prevent, like we said, wealth deterioration, to keep yourself wealthy, especially for these large-scale, sophisticated institutional investors who are very much aware of the damaging effects of inflation. They're just trying to look to outpace that, and more risk-on assets such as equities and, of course, Bitcoin and cryptocurrencies are ultimately going to be the #1 place to do that. And we're already seeing triple-digit BTC percentage gains, especially in 2023, where Bitcoin bottomed out in the low $15,000, $16,000 region, as to today, we're around $40,000. And this trend is very much likely to continue in 2024 if we continue to see the increasing trend of liquidity coming into markets. If you liked this video, then please visit lookintobitcoin.com, where we're currently providing some amazing holiday season site subscription discounts that provide a massive 35% discount for new site subscribers on our advanced plans, along with a monumental 70% discount for pro plan subscriptions to gain access to every one of Look Into Bitcoin's premium features. And make sure to act quick to lock in these unreal deals, as they're only here for this festive period. Thank you all very much for watching. Have a very Merry Christmas and a Happy New Year, and I'll see you in the next one.